What's going on, preppers? What is going on, YouTube family? Welcome back to the channel. It is Monday. It is Monday the 11th of April. Hope you guys are doing well today. I can't keep up with this weather. It was supposed to be warmer today than it was yesterday. Yesterday was beautiful, but today is just like, I don't know what's going on. Anyway, I wanted to give you guys a quick market update, housing market update. Lots of crazy things are going on. And some of my predictions may be coming true. I cannot wait to share this information with you guys later in this video about the housing market. Home sellers dropped their asking prices in greater numbers, according to Redfin. And I've been following this for a while now. I love real estate. Oh, and by the way, guys, please, if you haven't already, please do subscribe to the channel. I would love to have you guys join my new YouTube channel here. I really appreciate the support that you guys have shown me. You guys have shown me so much love over the last several weeks. They are making so much noise over there. So anyway, also hit the like button. I really appreciate the support. For those of you guys who have already hit the like button, I really appreciate that. Thank you guys so much for the love and support. But let's get on with the video. This housing market, it's really interesting. I love watching you know, the economic decisions that the Fed makes, and ultimately, you know, how the market as a whole responds to these different stimuluses caused by different economic events that are taking place. We've been talking about this potential housing market bubble. The U.S. housing market is expected to face some declines with the rising interest rates taking place. Fed has already gone up 0.25% on the Fed funds rate about 3 weeks ago now. Jerome Powell went up on the Fed funds rate. So mortgage rates have been going through the roof, in my opinion, over the last month or so. I personally got a mortgage for 2.8%, and that seems like a pipe dream now. I got a mortgage about 8 months ago for that amount, and about a year and a half before, I guess it was about a year and a half, I refinanced the house and got 2.8%. And so today, if you're looking to buy a house and you're looking at a 30-year fixed rate mortgage, even if you've got prime credit, even if you got A1 grade credit, you know, 740 and above, because whether you're 740 or 850, or, you know, you're not gonna, there's no difference in the interest rate that you would be getting. Pretty much, if you're at a 740 credit score or above, you're going to get the best interest rate available. So it doesn't matter if you're 740 or 850. But right now, if you're looking to get a 30-year fixed rate mortgage, you're going to be somewhere in around 4.5 to 5% on a 30-year fixed rate mortgage with no points assigned. And so I'm sorry, I don't know if you guys can hear this noise in the background. It's crazy. Like here we have a housing market video, and I wanted to share with you guys some information about the housing market crash that many people, it's probably very divided at this point if there's going to be a housing market crash, but there's some really important data I want to share with you guys in this video. But in the middle of this video right now, there's construction going on. One of my neighbors is building a pool in their backyard, and I apologize for being distracted, but I wanted to let you guys know what that noise is that you may be hearing. It's like a big old construction. I don't even know what you call it. It's a construction piece of equipment. They're pulling dirt out. I think they're building a pool. I'm gonna see if I can show this to you guys. I don't know if you guys can see this, but they're doing some construction work next door, actually a couple of houses over, and that's what all this noise is. So anyway, I just wanted to share that with you guys so you understand why I'm so distracted and why there's so much noise in the background. But anyway, so according to Redfin, rising mortgage rates are causing sellers to drop their asking prices in greater numbers. So in today's housing market update, I wanted to give you guys my take on this, what I think is going to happen. It's warming up a little bit. I don't think I need the hood anymore. It was definitely chilly out here. But what I think is going to happen in this housing market, and some new insight on what the Fed's going to be doing, or what the Fed is strongly considering. And a couple videos back, I can't tell you which one, but a couple videos back, it was a housing market update video, housing market crash video, and I talked about the fact that the Fed is more than likely going to be making some major mortgage changes that will allow people to afford more. Details on that later in this video, but it looks like my prediction may be coming soon, coming to fruition sooner than expected. But let me share this article with you guys. This was a article, let's see. All right, so this is from the nationalmortgageprofessional.com. It says here, home sellers are lowering their prices to make their houses sell. There's a new trend in home sales dropping prices. While Redfin is seeing only a small portion of the homes with lower prices since being listed, about 12% according to the online real estate website. It's up from 9% a year ago, with some of it due to the increase in interest rates. Now, okay, let's take a step back here. It says about 12%. It says only a small portion of houses with lower prices being listed, about 12% according to the online real estate website. It's up 9% a year ago. So you have to think about it for a second. Like, last year was just unreal. Last year was a pipe dream if you're a seller. You listed a house on the market, and instead of traditionally, you list a house, you expect to kind of hopefully get your ask price. If not, you kind of expect to get lowballed by a buyer to get a discount, try to negotiate the price down. Last year, it was completely opposite. If you were a seller and you were trying to sell your house, whatever you were asking, you were getting anywhere from $10,000 over asking price to, I've personally seen as much as $100,000 over your asking price for the sale of your house. People were fighting tooth and nail to get into a house. Real estate was just ridiculous. We were looking at houses last year for a whole year, and we got beat out. We were outbid by buyers left and right on these houses, and it was ridiculous. I mean, we would walk into a house, and you needed a good 45 minutes, an hour to look through these houses before you drop multiple hundreds of thousands of dollars on these houses, right? But it was so crazy. We would go to a house that's listed on a Thursday. We'd show up at, say, 9 o'clock in the morning. We're like the first or the second showing, and we have 15 minutes to get in and out of this house because there are 24 other showings right after you. It was literally ridiculous. And I'm like, wow, on a Thursday morning, it was this busy. I mean, don't you people have like work to do? Like, there were so many people lined up just to see these houses, and 15 minutes was not enough to thoroughly walk through the house. It just really wasn't. And you're making this massive decision to purchase a home. For most people, buying a home is a big deal. For me, it was a big deal. And you're being rushed, like seriously rushed, to hurry up and look at this house and get the heck out so that the next person can come in for their appointment. The pressure was unbelievably high. Today, and that was with interest rates, around 2.8%. Today is a little different. There are properties still going for above ask, still, even though interest rates are sitting at 4.8%, 5% now. It's interesting. What's happening though is that fewer and fewer buyers are being able to qualify for these mortgages at these higher interest rates, because while they can qualify for the mortgages, they're not getting qualified for as much. So with that, there are going to be fewer buyers at each price point, at each price level for real estate. It's just basic mathematics. So what they're saying is basically Redfin is seeing a small portion of the homes with lower asking prices since being listed. So what they're saying, what I'm gathering from this is that home sellers are starting to see, hey, we're not seeing as much demand, as much rave for these houses when they're being listed. You know what? Let me come down a little bit on price. Now, this is a very small percentage. Now, Redfin is a national mortgage company, or not a national mortgage company, it's a national real estate listing service. So this is across the spectrum. So obviously real estate is very local, and so there may be some weaker housing markets dragging this number down just a little bit, and that's why we're seeing that 12%, 12% of homes are listed lower according to Redfin. So this could be, you know, the area of town or the area across the United States where, you know, the demand's just not really that strong, you know, and so it's kind of is casting a shadow on the overall real estate market. But again, it's only 12%. It says here, quote, price drops are still rare, but the fact that they are becoming more frequent is one clear sign that the housing market is cooling. This comes according to Redfin chief economist Daryl Fairweather. It goes to show that there is a limit to sellers' power. And also, I think it goes to show that there's a limit to the buyers' buying power, which I called out previously. Now, what I wanted to share with you guys, which is very, very interesting, I'm going to just share a quick clip with you guys. I talked about this in a previous video that we've seen when you used to buy a car back in the day. I mean, let's just say 20 years ago, you buy a car 20 years ago, financing for 48 months was traditional. Most people did 48 months, and then at some point it became very commonplace for buyers to buy a car at 60 months. And then as cars became more and more expensive, you would end up buying a car, financing it for across, you know, maybe the length of time might be 72 months. That increased amount of payback period for these car loans allowed you to buy more car for the same amount per month that most people were comfortable making. So it allowed car prices to keep going up and up and up and up in price. Same thing happened with mortgages. 30-year mortgages weren't always commonplace. 30 years ago, mortgages, you might get a 20-year mortgage, it might be a 15-year mortgage. Matter of fact, my grandmother used to tell me mortgages used to only be 5 years long. Well, anyway, as real estate became more and more expensive, longer mortgage payback periods, longer terms became available. So anyway, guys, I talked about a 40-year mortgage. In my opinion, it's not out of the realm of possibility in the future. And with the raising of interest rates, the Fed wants to cool off inflation, but they don't want to crash the housing market. They don't want to cause a recession. They don't want to crash the economy. It's a delicate balance. But one thing that I did say in a previous video is that if mortgage companies and banks began to allow 40-year mortgages, that would allow and support the sustainability of the current pricing of real estate. Everybody's expecting this massive real estate crash. Not everybody. Many economists are saying probably about 50-50. I'm on the fence. I definitely feel like the upside potential for housing prices to continue to go up is limited. I certainly believe that the long-term trajectory for real estate appraisals or appreciation is certainly upward. I feel like real estate today will certainly be worth more than real estate, or excuse me, I feel like real estate 30 years from today will be worth more than real estate today. So with that being said, I definitely am a bull in terms of real estate prices in the long term. In the short term, that remains to be seen. Well, many homeowners during the pandemic took advantage of a federal program which allowed home buyers to remain in their homes even during the time where you couldn't necessarily work. You know, obviously during the lockdown, a lot of people, if you didn't have the ability to work remotely and work from home, your income may have been severely hampered. So with that, many federally backed mortgage programs were made available. Well, I want to share with you guys a clip discussing the conversation about a 40-year mortgage being made available. And me personally, I really do expect this to be offered on a broader scale to more people than just those who are who have accepted the terms of these pandemic mortgage-related assistance programs. But let me share this clip with you guys right now.
March Fed meeting minutes showed officials are ready to shrink assets and move faster on interest rates, but will their plan do enough to cool red-hot inflation? Joining me now, Philadelphia Federal Reserve Bank President and CEO Patrick Harker. President Harker, thanks so much for coming on the show. Really appreciate it.
Thanks, Jack, for having me.
So you and many of your colleagues have acknowledged that the Fed got caught a little bit behind the curve on inflation. Now you're taking serious action. If part of the effort is to reduce demand, but supply chain is making stuff scarce, for lack of a better economic term, do you have to raise rates even higher because there's simply not as much stuff to buy?
No, I think we just have to be a little careful about that. We are starting to see signs of some healing in the supply chain. And so I think we need to move up to neutral. And with the reduction in our balance sheet, we'll be slightly above neutral. Exactly how much, we don't know. That should cool off the market. We're already seeing it. We're seeing it with the 30-year mortgage rates. We're starting to see some signs of housing starting to slow down. That's what we want. But we don't want to go into recession.
You see, guys, they're confirming, the Fed is confirming that they do not want to go into recession. So they're monitoring this thing closely. Historically, the Fed has overreacted. Hopefully, the Fed has learned from previous mistakes. But the goal is not to cause a recession. The goal is not to cause a housing market crash. The goal is to get a handle on demand, because supply can't quite keep up with it. The other goal that they're focusing on is getting a handle on inflation. But let's continue on with the video here.
So I want to pivot to an interesting op-ed that you've just written for Barron's, where you suggest that the Federal Housing Authority ought to be able to extend loan modifications by 40 years from 30. It sounds technical, but you say it could really help the situation.
Yeah, I mean, ultimately, what we want is we want people to stay in their homes, have a place to live, particularly for those who are struggling, and also for the financial system, the banks, to not lose that much money in the process. So there's a variety of ways of thinking about this. One such way, which HUD has proposed, they put out a proposed rule in the Federal Register on April 1st. And so it is out there for a 60-day comment period. And that does propose a 40-year mortgage modification. We think that has real benefit through the work we've been doing. Right now, about 1 million mortgages are seriously delinquent. Half are in loan modification, half are not. And those people who are not in loan modification, they need some help. And I think there's a win-win potentially here for the banking system and for those people so they can stay in their homes.
And the silver lining of prices going up so quickly is we've got many fewer people underwater, maybe not at all.
Yeah, we got $10 trillion of tappable equity right now as a record in the housing market.
All right, guys, so I hope you guys got some good insight on this one. I wanted to share this with you guys. So there are, so you have a handful of delinquent mortgages. Some are in loan modifications, some are not. They're looking to extend loan modification options to those who need it. He just confirmed, from the Federal Reserve just confirmed. And here's the thing, this 40-year mortgage is being considered. This is real conversation. The Federal Reserve and the Housing Authority, they're literally having this legitimate conversation right now about a potential 40-year mortgage. And I want to share some insight. I don't know if you guys are familiar with a company called NACA. I don't know if it's a company or if it's just a .org, like an organization where it's not a company. It's more of a maybe a government-backed social organization to help people. But back in 2008, 2009, 2010, 2011, mortgage foreclosures were rampant. And we were thankful enough, we were blessed enough to be able to be in a situation where we needed help to stay in our home. And at the time, we had a 6% rate interest. We had a 6% 30-year fixed rate mortgage rate on our home, and we were facing tough times. And we were thankful enough, we were lucky enough to have encountered a woman at the church that we were at who let us know about this particular company called NACA. And I may be calling it wrong. It might not be a company. I think it's just an organization. Anyway, NACA. And you can probably Google it right now. Matter of fact, I'm gonna Google it right now just to see if they're still around. NACA, NACA. Here it is. And they help you with mortgage foreclosures. If you need assistance, economic assistance, they also help people buy houses. But here it is. It is the Neighborhood Assistance Corporation of America, fighting for economic justice with America's best mortgage. Now, here's the deal. We were in a situation where we needed some serious financial assistance. And, you know, I didn't think that we could make it out of the situation we were in. Lo and behold, a woman at the church told us about NACA, and we worked with them through faith, because I didn't believe that, you know, that there was anything that this random company could do to help us out. Anyway, long and short of it, we work with a I don't know, for lack of a better term, like a financial coach at NACA, and she was so comforting. She was our advisor, and we worked with her exclusively to apply for assistance and ultimately modify the mortgage that we had. And they gave us a tremendous, unbelievable interest rate. We went from 6% at the time, 30-year fixed rate mortgage of 6%. They brought us down to 2%. No, I think it was like 1 point something percent. And then that's what it was. It was like 1 point something percent at first, and then it graduated upward to a cap. So we modified down to like 1.5% interest rate for like a year, and then after that it went up to like 1.75%, and then ultimately it capped out at 2.5% for a 30-year fixed rate mortgage. So we got this unbelievable term and allowed us to stay in the house. It prevented a foreclosure from hitting the market. It prevented another family from being put out on the streets. But here's the thing. That was a mortgage modification that was only available to certain people who were in certain financial situations like we were. Millions of people were approved for programs like this. And at the time, a 2.5% interest rate mortgage was absolutely unheard of. Well, 8 months ago, 2.8% interest rate mortgages were all day available for you with no points down. If you paid points, you could have gotten 2.5%. So my point is this: programs like these, like what the Federal Reserve is discussing right now, 40-year mortgages, were just like the programs and mortgage terms available for NACA back in 2008, 2009, 2010. These were behind closed door discussions before they became mainstream. No one saw 2.8% fixed rate mortgages being available widespread, but they were available for the last 2 years. Interest rates are going up, so they're not available right now unless you're paying significant amounts of money on points to buy your rate down, your mortgage rate down. But the point is this: a lot of times these conversations end up becoming actual programs that get passed. So if they're talking about a 40-year fixed rate mortgage, and I told you guys this could be possible. If they're talking about this, I would expect that something like this could actually come to fruition. And with organizations like NACA, with the message that we just got from the Federal Reserve, it really seems like they do not want to have a massive foreclosure situation, and they certainly don't want to crash the economy, and they don't want to drive us into a recession. So I have reason to believe that we may see some really unusual or maybe unconventional terms become available for mortgages to the tune of 40-year mortgages, 40-year fixed rate mortgages in our future. So we'll see if that pans out and it actually comes into fruition. It's being discussed, but we'll see what actually happens with that. Now, if that does happen, I would expect that home prices will only go higher from there, because guess what? When you can finance for longer periods of time, you have a smaller mortgage payment. You have smaller payments. So that allows you to buy more house. And if more people can afford a given price point, then there's more competition. So then what happens is it creates more demand in the housing market. So, and it forces prices upward. We've seen this with colleges and student loans. College didn't used to be so expensive. It wasn't always so expensive to go to college, but because so much financing became available, more people could afford to go, and colleges, they're businesses too. They drove up their prices. And the same thing will happen in any economy, any market. The more demand there is for a given item, the higher prices will be until it meets an equilibrium between the buyer demand and seller demand. So anyway, guys, my 2 cents on the housing market. I'd love to hear from you guys. What do you guys think about this? Drop your comments drop your thoughts in the comments down below. Are we headed higher for mortgages? Are we headed higher for real estate prices? Are we going to see a housing market crash? Are we in a housing bubble right now? Do you agree with Redfin on the slowing of the housing market in terms from a buyer standpoint, at least in the short term? Let me know what you guys are thinking in the comments down below. If you haven't already, please subscribe to the channel. Also hit the like button. I appreciate the support, and I will see you guys on the next video.